St. Louis-based Peabody Holding Company, the nation's largest coal producer, is proud to support Channel 9's broadcast of the Nightly Business Report. Peabody, 12,000 men and women, working together to help meet America's energy needs by mining and marketing coal, the nation's most abundant fossil fuel.
The Nightly Business Report, produced in association with Reuters, the world's largest electronic publisher. Made possible by Digital Equipment Corporation, helping customers throughout the world to plan, build, and manage enterprise-wide computing solutions. By Kidder Peabody, one of the world's leading investment firms, and GE Capital, providing business with comprehensive financing. Two companies of GE Financial Services. By A.G. Edwards, members of the New York Stock Exchange, serving individuals and businesses through more than 340 locations. A.G. Edwards, investment since 1887. And by contributors to public television.
Good evening, everyone. As part of an effort to clean up the finances of 200 ailing savings and loan associations before year-end, government regulators today agreed to provide about $6.8 billion in aid to bail out 6 S&Ls in Texas and California. As Washington correspondent Dennis Moore reports, today's deals indicate that the cost of restoring the health of the thrift industry is likely to be on the high side of estimates.
The sheer size of the bailout plan confirmed what banking industry analysts have been claiming for months, that the S&L problem has grown far larger than the Federal Home Loan Bank Board has up to now been willing to admit.
It's an indication that the problems in the non-high flyers among the Texas thrifts also are very, very serious. The Bank Board hasn't acknowledged that because to do so is to acknowledge that there has to be a taxpayer bailout of the FSLIC, and the Bank Board is postponing that recognition as long as possible.
The first deal combines 5 Texas S&Ls with assets of more than $12 billion. An investment group headed by takeover artist Ronald Perlman is putting up $315 million, and the Federal Savings and Loan Insurance Corporation more than $5 billion. The second deal is a revised plan for California's American Savings, the largest insolvent S&L. It takes $350 million from the Bass Brothers of Texas and $1.7 billion from the FSLIC. Federal Home Loan Bank Board Chairman Danny Wall says these two deals shouldn't suffer the criticism directed at earlier FSLIC-assisted takeovers. Criticism that the government was giving a free ride to the buyers.
We had a very significant number of very significant bidders who came to the table, and it was a very tough competition as to who was going to be the best bidder. A clear indication that as we get more bidders, we get better deals.
The Texas deal means the FSLIC has now put 153 of the nation's 500 insolvent savings and loans back on a more or less stable financial foundation. But the process has left the insurance fund itself insolvent, and Wall is promising a detailed progress and planning report early next year. So while the federal regulators still won't officially raise their $50 billion estimate on the size of the S&L bailout problem, the size of today's deals is at least a tacit admission that the outside experts for pegging the eventual cost at $75 to $100 billion may be right. In Washington, Dennis Moore for the Nightly Business Report.
Prime Computer today announced plans to lay off 1,200 workers in January, 10% of its worldwide workforce. The restructuring move is expected to save the computer manufacturer $50 million in 1989, and the firm says those savings should prove to shareholders that a hostile tender offer by MAI Basic 4 does not reflect long-term values that Prime can achieve. The cost of the layoffs, along with other actions to fight MAI's bid, are expected to reduce Prime Computer's profits in the current quarter by about $40 million. Paul?
Incidentally, Prime Computer stock closed at 17 3/8, up 1/4. Prices on Wall Street opened on a firm note this morning as some normal year-end demand for blue chips reversed yesterday's late downturn, which resulted in a closing loss of 6 1/4 points in the Dow Industrial Average. A slight show of strength in the dollar helped stocks in the early going, and by 10 a.m., the Dow posted just over a 5 1/3 point gain with 5 issues higher for every 4 lower. Again, suffering from unimpressive volume, the market began to lose ground slowly over the mid-session hours, especially when a high Fed funds rate undermined bond prices. The dollar also faded after economist Martin Feldstein said that trying to stabilize the greenback through international cooperation might be more harmful than helpful. By 1 p.m., the industrial average fell to a 2.5-point deficit, and losing stocks drew even in number with gainers with about 650 of each. Stocks stabilized and then bounced back a little with the help of positive comments from Federal Reserve Chairman Greenspan, who said the economy is still intact despite last year's crash. And the implication, I would presume, is because the Fed handled monetary policy very capably. In any event, at 3 p.m., the industrial average posted almost a 3/4-point gain, with winners and losers still even in number. Ignoring weakness in the bond market, stocks continued to move higher, mainly due to seasonal buying in the final hour, and the Dow Industrial Average went on to post a modest gain of 3.75 at 2166.43. Theoretical high of the day, almost up to the 2180 level, and then low down around 2153.5. Trading volume today moved up smartly from yesterday's pace to 110.6 million shares, but still relatively slow. Up volume did exceed down volume by 21 million shares. That was a little more impressive. The Dow Transport Index gained just over 1 point. Utilities up 0.18. The Dow 65 up 1.18. And the closing tick still a minus 222. Standard & Poor's 500 gained 1/4 point, a little bit better than the 400. The 100 got only 0.13. The Commodity Research Bureau March Index fell just over 1 point. The New York Stock Exchange Index gained almost 1/4 point, Value Line rising 0.65, and the Wilshire 5000 was up the better part of 4 points. The bond market came under early selling pressure today when the Fed funds rate moved above 9%, while oil prices showed firmness and the dollar didn't. Even though the Federal Reserve added funds to the banking system, Fed funds remained high, and that was discouraging. And there was also concern over how today's Treasury auction of $9 billion of 2-year notes would be received. As it turned out, not particularly well, since the notes were priced to yield a slightly higher than expected 9.23%, which does indeed give stocks tough competition. Corporates and tax-frees ended the day off 8 1/4, while governments fell about 3/8 point. The long treasuries, the 30 years, off 11/32 on the day. Shearson Lehman Long Treasury Bond Index down 4.81. And Fed funds, as you see, closed very high at 9 3/8%. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets, platinum prices fell sharply, although the drop came in very light trading. Gold fell in tandem with platinum, while silver edged down. The dollar made big gains in thin year-end trading, but sputtered when the head of the Bundesbank said the dollar's recent rise does not suit the German bank. The pound fell nearly 1 1/4 cents against the dollar. And oil prices moved up 2 cents a barrel in New York and 4 cents a barrel in London.
As Paul noted, Federal Reserve Board Chairman Alan Greenspan today said the economy has remained surprisingly strong despite the October 1987 collapse in stock prices. Addressing the Allied Social Science Association in New York, Greenspan noted that since the crash, the economy has managed to operate at the highest level in many years. But the Fed chief cautioned that measures are still needed to guard against another market collapse.
More needs to be done, especially to increase the consistency of rules and procedures for markets located in different countries. Differences in market design and regulatory structure make the job difficult, but as integration of international markets increases, and that is inevitable, broader coordination will become all the more essential.
Greenspan added that had the crash not occurred when it did, it would have happened soon afterward. As he put it, the market plunge was an accident waiting to happen.
Japanese stock traders ended 1988 on an optimistic note. In the final day of trading on the Tokyo Stock Exchange for this year, the key Nikkei average rose more than 108 points to close at a record 30,159. That brought the gain on the index for this year to 8,595 points. That's a 40% increase. And it brought some cheers on the exchange floor as part of an extended year-end celebration. The Tokyo Exchange will remain closed until January 4th when it reopens for a half day.
Well, it appears that 1989 will be another banner year for capital spending by American businesses. The Census Bureau says its latest survey of business spending found that businesses planning to spend a record $456 billion for new plants and equipment. Now, while that would be 5.9% more than they spent this year, it would represent a slower increase than the 10.8% jump in capital spending that the survey shows for 1988.
Charges continue to fly in the dispute between the United States and the European community over the EC's plan to ban imports of meat treated with growth hormones. European officials today denounced the U.S. decision to retaliate against that action by raising duties on European food imports, calling the U.S. measures totally unjustified and a violation of world trade rules. National correspondent Helen Whalen reports on the international food fight, which threatens to blow up into something much larger.
My view is that we can win a trade war.
So does the European Economic Community, and that trade war could be starting over the exports to the European community of U.S. cattle fed with growth hormones. The 12-nation European community believes the hormone-fed cattle are unhealthy. It's banned the use of hormones by farmers throughout Europe and believes it should be able to apply that ban to imports. But the U.S. charges the Europeans are fabricating a false health scare, and that the EC is getting ready for 1992, when Europe becomes one giant trading market.
They will become Fortress Europe, and they're using all of these directives to build toward 1992 in order to shut out trade from other sources.
Starting on January 1st, the EC will ban U.S. imports of hormone-fed beef. The U.S. then plans to flex its muscle under the new trade law and shut out European beef, tomato paste, wine coolers, and fruit juices. These are valued at $450 million, 3 times the export value of U.S. hormone-fed beef shipped to Europe.
If the U.S. puts into effect its retaliation list that it's already published, then we shall be forced to, as they say, defend our commercial interests.
It depends on who is willing to say uncle in a case like this. And I really believe that given the current circumstances, we've got more determination. We're willing to take this farther than they are.
Daschle is talking tough because he represents South Dakota, where beef is the #1 industry. But overriding parochial state interests is the national concern. And the administration and Congress plan on nipping in the bud any plans by Europe to close its markets to U.S. goods. In Washington, Helen Whalen for the Nightly Business Report.
Interco today rejected a $190 million offer for its London Town outerwear manufacturing division from Burlington Coat Factory Warehouse. London Town makes the London Fog line of raincoats, and Interco said it will go forward with plans to sell the unit to a management-led group for $178 million. Interco's board cited Burlington's inability to promise a timely closing on the deal as the reason for turning down the higher offer. Turning to you, Paul, how did those stocks fare? Interco
turned down 1/8 of a point at 3 3/8, and Burlington Coat didn't change today. Same as close as yesterday, 17. But the Dow Jones Industrial Average did a little better than yesterday, bounced back with a 3 3/4 point gain at the 2166 level, and about 7 stocks up for every 6 down, I guess you'd have to call it. 30 new highs and 30 new lows, kind of a high caliber day. SCE Corp, the old Southern California Edison, topped the active list on just over 3 million shares. The stock moving up 5/8. It's a dividend play. It goes XD tomorrow, 62 cents a share. Second in volume, Navistar, no change at 5. Then came the star of the day, Quantum Chemical, up 18 5/8 points. The news there, the company has declared a special $50 a share cash dividend as part of its recapitalization plan. Savin Corp, edged up 1/32, I should say. Pacific Telesis was down 1/4. Northern States Power showed no change at 32 5/8, although it was trading ex-dividend 53 cents today. No change in Ma Bell at 28 7/8. Commonwealth Edison edged up 1/8. Interco, there you see, no change. I had it down at 1/8, so I think that was a West Coast quote I gave you long after the big board closed. Pittston, 10th in big board volume, off 1/8 of a point. AMR, parent company of American Airlines, moved to 1/2, and then Cray Research, a 2 1/4 point gain on the news that the company's received an order for one of its large mainframe computers from Mitsubishi. DuPont down 1/2. The Environmental Protection Agency is fining DuPont $8.2 million for putting too much lead in the gas produced by its Conoco unit. Eastman Kodak dropped 1/2 today. Exxon edged up 1/8, while General Motors dropped 1/8, and IBM off 7/8. Not much movement in those big blue chips. Dallas Corporation, which makes various industrial products, moved up 3 3/8, and the company said it does not comment on the movement of its stock. No information for us at all. Whitaker Corporation up 3 7/8. The company said it's considering an acquisition bid from an unnamed third party. It recently rejected a $47.50 a share buyout bid from investor Louis Kiola. Georgia Gulf and Vista Chemical. This is obviously in sympathy with what Quantum Chemical did. These are similar companies, and so Wall Street is speculating these two companies might have also maybe some kind of special dividends. This is our All-American board. American Store is up 2 1/8 points. C.J. Lawrence Brokerage yesterday valued the breakup value of this firm around $130 a share. Then American Brands down 3 1/8 points. It's been up some like 12 1/2 points in the last 2 sessions. A little profit taking there. Over in the American Exchange, a gain of 0.70 in the market value index. Trading volume up nearly 2 million shares from yesterday's pace, but a few more issues losing than gaining. Topping the active list, Wang B, edging up a quarter. That's the America's Trust, American Telephone Prime, America's Trust down 1/8. Telesphere no change. Echo Bay off 1/8, and Western Digital moved up a point. Champion Products up 2 1/2 points. Companies rejected Walsh & Greenwood's $55 a share buyout bid as inadequate. Chase Medical Group, which tumbled 2 points yesterday after the American Exchange said it's investigating trading in the stock, bouncing back 3/4. NASDAQ trading, just a small gain of 0.12 in the index. Volume, however, up 25 million shares from yesterday's pace, and only 16 more issues higher than lower at the close. 100 index off 0.18. Apple Computer topped the active list, down a quarter, as was Intel. Lynn Broadcasting dropped a half. MCI no change. Intergraph off 1/4. Telecommunications A off 1/8, while Reuters Holdings gained 1/8. Precision Castparts no change. Same story with Nordstrom, and Sun Microsystems up 1/4. Financial News Network, there's takeover talk all over the street. Recently, Gateway Investment Advisors upped its stake in FNN to 27%, and Info Technology already owns 48%. So it moved up 7/8 along with FNN. Then Garrity and Miller tumbling 1 7/8. The company says its fourth quarter earnings will be well below Wall Street estimates. That's our Wall Street wrap-up. Linda?
Paul, in some positive news, the Conference Board predicts steady economic growth for the world's top 10 industrial countries in 1989. The board's International Economic Scoreboard shows that those countries should register combined growth of 4%, with Taiwan leading the pack with a 15% growth rate. Other Pacific Rim nations are next on the list, followed by Italy, West Germany, and France. And while indices for the United States and Canada point to 2% annual growth rates, the British economy is projected to grow by only 1%.
One nation that's been the object of an international campaign to slow down its economy is South Africa. And as Reuters correspondent Chris Wilson reports from Johannesburg, that effort is beginning to take its toll.
South Africa, an economy built on gold, a country shunned by the world because of its apartheid race laws. Buffeted by weak gold prices, sanctions, and a cut-off of foreign bank loans since 1985, South Africa, once the powerhouse of half a continent, is beginning to show the strain of isolation. 150 U.S. companies, half the American firms in South Africa, have already pulled out. The rand has fallen to record lows against most major currencies. Bank prime lending rates were raised 5 times this year to 18%, and the country's trade surplus is dwindling. Strategic reserves of gold and foreign currencies are barely enough to pay for 6 weeks of imports. South Africa desperately needs economic growth. The trouble is it can't afford it. Any other developing nation would borrow the money it needs to stimulate the economy. But even the International Monetary Fund will not lend to Pretoria.
I think there's no doubt about it that the financial sanctions have been much more important in their effect than the trade sanctions so far.
Unemployment is running at 35%. Economic growth has slowed to a crawl, and inflation is running at 4 times that of Pretoria's biggest trading partners. Despite outward signs of prosperity, South Africans are getting poorer, and apartheid is getting the blame.
If the political system in our country were to be changed, I'd like to believe that that change in itself would immediately open a chest of riches.
By snapping up divesting foreign companies at fire sale prices, many big South African concerns have grown even bigger. But not enough new factories, badly needed for jobs, are being set up.
It's because they feel uncertain about the future, and they would rather consume and not invest.
Without foreign capital, South Africa cannot provide the jobs or the growth it needs for long-term stability. Many analysts believe the outlook is bleak unless the government moves away from apartheid so that Pretoria can again be accepted by the international community. In Johannesburg, this is Chris Wilson of Reuters for the Nightly Business Report.
Coming up, Adam Smith says nations worldwide are trying to reduce the role of government in their economies.
Penwalt Corporation today refused an offer to meet with Centaur partners to discuss Centaur's $100 a share, $700 million buyout offer, which it rejected earlier this week. In a letter sent to all Penwalt shareholders, Chairman and Chief Executive Officer Edwin Tuttle said Centaur's business philosophy is not compatible with the ideals of the Diversified Chemical Corporation. Centaur's principals say they are disappointed since they're prepared to discuss all aspects of their takeover bid.
Hoechst Celanese Corporation today filed suit against General Electric and General Electric Canada, accusing them of patent infringement in the manufacture and sale of polyester molding compounds. Hoechst markets the products used primarily in automotive applications under the brand name Celanex, while General Electric markets its products under the Velox trademark. GE had no immediate comment on the lawsuits, which seek an unspecified amount of damages. A survey sponsored by the Joint Council on Economic Education shows that many of the nation's high school students are virtually illiterate in economic matters. Of more than 8,000 students questioned, only 25% knew the definition of either profit or inflation, while 39% could explain GNP and only 45% were aware of the government budget deficit. Presenting the survey results, former Federal Reserve Chairman Paul Volcker said it's important to incorporate economics into general high school curriculums.
I think you may get greater interest in learning English, learning composition, learning logic, if it's done in the context of also teaching some very basic economics at the same time. And I would think that that is quite possible, and in fact will enhance some of the skills, the very basic skills that we need. So I'm not willing to concede that there is an important conflict. I don't think we should attempt to teach very sophisticated economics.
The Joint Council on Economic Education proposes teaching economics from kindergarten through 12th grade, making high school economics course a requirement for graduation, and improving teachers' grounding in economics. In tonight's commentary, Adam Smith, host of Adam Smith's Money World, says even down under there is a growing appreciation of market forces.
We've just gotten back from Australia and New Zealand, which have been traveling much the same road as the United States and the United Kingdom under Margaret Thatcher. That is, they've been reducing, or trying to reduce, the role of government. Both countries have seen tax rates come down sharply, and both are talking about privatizing or selling off government assets. New Zealand is selling part of its national airline and its telecommunications. We never had a national airline, and we would probably have trouble selling off the U.S. Post Office. And of course, there are other differences between commodity countries, even those that speak English with charming accents, and a large and complex economy like ours. In New Zealand, the initial enthusiasm of the business community has now been tempered by the rest of the country, which is in a recession and wants the government to continue its aid and its social programs. And all through the boom and the recession, Japanese investors continue to arrive. They've bought up Australia's Gold Coast just as they bought up Hawaii. That is the worldwide benefit of a surplus and a strong currency. All over the world, countries have seen this turn from government direction and control to some appreciation of markets and market forces. Stock exchanges have sprung up even in communist countries like Hungary and the People's Republic of China, even though they don't mean much there. Well, how far will this market phenomenon of the 80s go? Certainly looks like the pendulum will continue to swing in this direction. The real test is, what do the voters ask for when hard times come, whether it's our own farm belt or the depressed local industries of New Zealand? Do they look to the government for help? even in market economies, they seem to, no matter how much enthusiasm greets the original idea of cutting back on government and its regulations. I'm Adam Smith.
Recapping tonight's top stories, the government moves to bail out